Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here's your weekly technical analysis of LME 3-month lead and tin. I'll start with LME 3-month lead. The market's turn back up from an uneven pipe bottom in mid-July has been a seminal moment. Prices rose up through the short-medium moving average, currently at 1977, the 50% Fibonacci line of the March 20 to March 22 move at 2135, the lower time extension of the May to June 2021 descending triangle, currently at 2157, the medium moving average, currently 2006, stopping finally just short of the declining long moving average, currently 2158. It seems the rise saw attrition all the way up and finally gave up with a key reversal down in mid-August. Interestingly, the fall had been initially halted at about the same level as when it did so back in late June and early July at the 2021 level at 1908, the 2021 low at 1908. Yet prices decided to still move lower, pushing down to and through the uneven pipe bottom low formed in July and the May 2019 low at 1774. Finally, the October low at 1750 halted the decline and created a successful 3-day pattern 2 weeks ago. And that was a bullish morning doji star pattern. This bullish pattern punched up as high last week as over the January 2020 high at 2039, but failed to close over it. However, it did break the back of the April to August bearish Andrews pitchfork, the one that's been running the market lower. That closing well over the upper time, currently at 1932, as well as the short, medium and medium moving averages. Yet the pushback up has not been entirely successful. As you can see yesterday, prices dropped back down after last Thursday forming a shooting star pattern type 1 bearish, such that we closed yesterday below both the short, medium and medium moving averages. The bearish Andrews pitchfork will be retired after this commentary, but even today we are seeing action ongoing. We've seen prices today move up over the short medium moving average and currently hesitate just under the medium moving average. This is a sign perhaps of intraday indecision, a possible realization of just what the market has managed to achieve these past 3 weeks, and a question as to whether the market was happy doing that. This has given us one further new question. Is the action since late May to date, is it a double bottom or is it something else? This is an open question, and an open question I'm hoping to have an answer for soon. LME 3-month tin. First off, please ignore the different colors of my labels. There is no special significance in these, it's just my charting system playing silly buggers again. Anyway, the one seeming constant factor here since March until recent days had been the March-based downtrend, currently at 18,030. Even 3 weeks ago, when prices punched up over this downtrend, the move higher was met the following Friday by a combined key reversal down, a bearish engulfing pattern and a bearish opening black Mariposa, closing back below the downtrend. This did not last, as the following Monday saw a combined hammer pattern, which oddly enough could also be seen as day 2 in a 2-day homing pigeon pattern. Yet the hammer pattern was enough to push prices back up over the downtrend. This downtrend will be, unless something drastic happens, it will be retired before my next commentary. Yet despite this destruction of a bearish pattern, prices still continued lower, though at a much gentler slope, making new lows yesterday, not seen since early December 2020. Prices have now been testing down to the November and October 2020 highs at 19,150 and 18,585. Indeed, there's a band of congestion. Well, it's not that great a band, but there's a band of congestion, but still something, between about 18,585 up to yesterday's low at 19,310. I have to say this congestion zone is not as impenetrable as the congestion area overhead between 22,895 to 24,155 that we saw back in mid-June through to early September, acting as support. Yet unless prices turn around sharply back lower, we will see this congestion area being being tested again. What is interesting, underneath this 19150 to 18585 congestion area, we have little in the way until seemingly the 17525 area. Hence, this congestion band below is one to watch carefully. Thank you for listening. This weekly broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.